Hello and welcome, and thank you so much for clicking on my video. Really do appreciate that. As we get into the bigger time frames for our Saturday video for the SPY Qs, Apple, Tesla, Amazon, NVDA, AMD, and Meta, going to look over for a pretty big update for AMC and GME. We always have to be aware of those when we see big drops in the market, because that could mean that the collateral is a little bit at risk, and that could be a good sign for AMC and GME. Talking about Roaring Kitty coming back just a little bit, dropping Chewy, and Unusual Whales kind of posting that he may be buying a bunch of GameStop calls. So there's some stuff to get into. Let's just read into these signals and let's get started. As we look at the SPY, remember, we pay attention to both sides. So yes, we were talking about some reversal that could take place and get some kind of trap to the upside, but we also are good for thinking about both sides. We say this all the time. It is very good as a trader to pay attention to both sides of the story. And as of right now, you did have these highs up here, kind of confirming this as barely a lower high, meaning this could even be considered a double top by some individuals, which I think with the steepness of the RSI here, that divergence you got going on there, I think with that steepness, you would say, yeah, this is most likely going to be held as some divergence, or at least a moment to really pay attention. Now, even though we didn't get that curl up, we always give a second thing to pay attention to. When that did cross down on this MACD, sure, you can get some kind of bounce, but you notice we reject twice and then we end up going to the downside. We're going to go into the shorter time frames to talk about this a little bit more and why we still could bounce from this level actually, but it looks like for the time being, if this were to go negative, that would be a very bad sign, and that would indicate, hey, we may even go test this low or go make a new one. So I would be really paying attention to these daily signals, and then we'll go over the shorter time frames to see what's going on there. But this update this weekend is more so just saying, hey, we talked about being aware if this MACD did cross over, the bigger time frame is the most important one. So I guess that's the lesson in this part is, yes, we were looking at those shorter time frames for some kind of bounce. We got these little tiny bounces, and then we ended up falling to the downside. Why? Because daily momentum is stronger. Okay, so daily momentum is stronger. Looks like we have some fears of possible cutting by 50 basis points. It looks like that's going to be in people's minds as we get more and more data throughout the week. That can change, but this is the main signal we're watching. If you want to know, are we going to experience a crash? Well, let's just go through. Let's look at weeklies and things like that. Weekly just got a rejection, and look at that. You have a rejection divergence, and that is a very bad bar there. So you do have the divergence definitely right here, and right here on your MACD, right here on your RSI, and it goes all the way across on that RSI, and it goes all the way across on the MACD actually. So this weekly rejecting here does say that we have weekly momentum to the downside, and that could lead to lower prices over time, even if it is some kind of dramatic pullback, right? Dramatic pullback like the last time. We saw this move down here, we got close to that center line, and we curled back up. So be aware that we could curl back up. Now, what is something that we need to be aware of if we're going to possibly see a curl up, but maybe a even stronger momentum takes over? That would be the monthly scale. The monthly scale is going to be very important because it still has that divergence that we've talked about for a long time. And I know we keep talking about it, but this is what we have to be aware of over the next couple of months as we see a downturn. So we're going to be looking for those reversal signals on the shorter time frames. But for now, the monthly signal looks like, hey, if this thing confirms down, we might see something even uglier, something uglier than we have seen in a long time. I'm not talking about a COVID thing. I'm not talking about some kind of crisis that then we just pump money into the system. They can do that again, but if this monthly crosses over, it could mean that we're going to go through months and months of selling into that bear market, that real bear market that ends up at extremely lower prices over time, maybe coming all the way down to this low. If we react quickly down to that low, we could see some kind of bigger bounce and then set up some good head and shoulder structure to head down. So these are just things to be aware of, because these things are important, and the daily scale is telling you you have to be aware of those things right now. The weekly scale is telling you you have to be aware of those things right now. And then if things turn back up, we can change our thinking a little bit here. But let's keep this in mind, keep all this in mind as we switch over to the Qs. Just going to go over the Qs again for a second. Remember, at major tops, what happens? Well, the SPY tries to go to those higher levels, either with that double top or a higher high. with some divergence behind it, and the Qs won't be able to do that. And that's exactly what ended up happening here. And you crossed over on the MACD. It's good we pay attention to both sides because this looked like some kind of bounce could come. That never happened. We confirmed down on the MACD. That tells you downside is the most likely option. Ending at the low of the day, touching that bottom Bollinger, we'll see if there is some chance for some bouncing as we go into some other stocks that we're going to pay attention to. And stick around so we can talk about AMC and GME with you, because it's pretty important to think about when you see stocks like tech stocks really seeing weakness. You have to say their collateral is at risk and they might get margin called. They might have to fund in some way their borrowing of the shares in order to short sell. So we'll pay attention to that. But for the Qs, the main thing here is looking at the daily. That thing crossed over. We talked about bad things happen when dailies will cross over for the Qs because it is so close to that center line. As we bump it up to a weekly scale, we're just noticing, hey, that thing rejected and turned down pretty dramatically here. You have divergence pretty much flat all the way across this and all the way across your RSI. Okay, pretty flat all the way across. So that is something to pay attention to. It does mean we still have the opportunity to turn down for a few weeks and turn back up, maybe make another divergence point or just get a bottom down in this area with some kind of daily divergence. So that's something that we'll talk about in a moment. But first, let's get through that monthly chart. If that weekly is just going to be some kind of dead cat bounce or not be able to turn up, this would be the signal that would cross over. This one right here, it is steeper for the Qs. So a lot of people ask me, which one do you think is weaker, the Qs or the SPY? I think it's going to be the Qs. If this confirms down, you have a little bit more divergence, very steep there. So I would think that would tell me, the indicators are telling me, hey, the Qs could experience a little bit more weakness. Now, real quick, I just wanted to flip over to the daily scale just to talk about this point, because we could see something interesting here, which would be a divergence for the Qs. I don't know if that would really pop up for the SPY, but I could see it for the Qs. So as we do cross into negative territory, remember we talk about those times where you get up, you try to go positive, and then you just turn right back down. That's what we were paying attention to, and that happened. So now we have to say, what's the next thing we can pay attention to? Well, right now, the most likely thing is downside. So let's talk about if we go down to this low and we see some basing out signals, what could that be down here? Well, we could create some kind of double bottom divergence. I want you to be aware of that, not to think everything has to crash down at once. Obviously, if monthly start to roll over and things like that, you're in a prolonged downturn that could be in the form of a crash or a bear market crash or something like that. But for now, you have to also pay attention to both sides of the story. That's what helped us here. That's what's going to help us in the future as we continue to trade. Apple gave a pretty good signal too, and we talked about this in one of our YouTube videos last week. So thank you so much if you're subscribed, because we talked about if the market is going to lead, or if Apple is going to lead the market in some way, well, Apple rolling over would make sense, right? Apple rolling over, it's a big stock, and that has rolled over. Now that's not dramatically falling off, but that could continue into next week. Maybe stocks just held up a little bit like Apple held up a little better because of options expiration. We never know. So we're going to go into the shorter time frames to see if we can whip around, but for now, the most likely direction, and the only reason I'm talking about that is because we are still positive. So this could be some kind of little pullback that shoots you up higher. We'll see what happens with that, as we could create some structure to head higher in a lot of these stocks. So we have to be paying attention to both sides, and that's why we trade like water on this channel. We just pay attention to the rocks in our stream, and we figure out which way momentum is going so we can end up in the meadow and not in the sewage. But as of right now, that is turning down, telling you if I cross that center line, what could I go do? I could probably go test that level of 197.47 again. So that is something to be very aware of. We see the weekly chart here up at the highs. What we notice from this weekly chart is if I just hold my mouse over here, you don't really have divergence on the MACD, but if I hold my mouse like this right here, you'll see that you do have that divergence on the RSI. So if this weekly crosses, that could be prolonged for a little bit of time, and then we'll see what happens, because if we start to roll over on this monthly chart, it's not going to be pretty again, right? We were paying attention to it here, saying, hey, something really bad could happen as this monthly curled over. What happened? 2 more months of downside, and then we shoot back up. Once we shoot back up, we got to say, again, if this crosses down, you just have multiple points of divergence here. So there are plenty of divergences here telling you the momentum is weakening. That's why monthly charts are going to be very important. And I just want you to be aware of it early. It's good to be aware of it early, 2 months, maybe 3 months in advance, so that you can be ready to react. Now, Tesla on the monthly scale, this is pretty much all I'm going to talk about with Tesla as of right now, just because this right here, this was something very important we pointed out. That was seeing some major upside. That was able to cross on a monthly, meaning Tesla could be a good opportunity for, say, 12 to 24 months as an investment. The problem here is, remember, we said this, it was early on in the month, right? This is very early on in September, so you have a whole month that you really have to wait and see if that's able to cross. So if this crosses back up towards the end of the month, then you could say, okay, there is a reason for this. But as of right now, that has not curled up on the MACD as of right now, so we have a long time in the month left. And as we go into a daily time frame, you're just going to notice something interesting here. We're still green, but look how close we are to that center line. So if Tesla is going to see some major weakness here, this would make some sense to curl down on that daily MACD and head to lower levels. So we'll pay attention to that. But it's a quick you got to be noticing as well. We give monthly expected moves on Patreon, as well as the courses are going to remain 90% off because this market's pretty crazy. You know, I like to keep those sales up while the market's crazy because these markets tend to rip people apart. So I want people to be able to learn. So if you want to learn this weekend, you can take the swing trading course and the technical indicators course, which will teach you more about divergences and everything you really need to know. Become a great trader for just $150. Literally, you can get both courses for $150 this weekend. Take it over the weekend and then come into the stock market on Monday with a completely different outlook on your indicators, on price action, on divergence, on RSI, on tons and tons of things, including monthly ranges. And monthly ranges are important because we're coming outside of a few of them right now. The SPY and the Qs are already outside of theirs, which means we have a 68% chance to bounce and get back into that zone. So that's what we're going to talk about a little bit on the shorter time frames. But as you get out of those zones, you can see something crazy, and it looks like we're seeing something crazy. It's just a point to pay attention to. You always have a 32% chance to see something crazy, 68% chance that we land back in those zones. So if Tesla does curl down on this daily MACD, it could start to experience something crazy. That's why I'm talking about it, because it could get out of that monthly zone, it could get below that 200 and really start to spread out these Bollinger Bands, right? We tried to spread them out to the upside, you fail, you turn down. Well, then this could all be a trap, and boom, we could head to the downside. So that's something we'll talk about with the dollar as well moving forward. Amazon's going to be a huge deal because we've been talking about the daily scale. Now, what's different about Amazon? It is completely negative on this MACD. So if it experiences weakness, you're pretty much guaranteed to go test the low and go make a new one. Now, when I say that, you still have to pay attention to reversal signals anytime, right? We could just come down to this point, react up, see some kind of little head and shoulders in here and end up going to the upside. So pay attention to both sides. That's why we trade like water. But the most probable thing to happen if this MACD does cross is test the low, go make a new one. The big problem with doing that is if you just zoom out, you'll notice we've had this trend line for a very long time for Amazon, and it's held up really well. So if you curl down and you start to reject from that area, that would be a bad sign. So if you come down to this area, maybe you even make a divergence and then that pops up and that fails in some way and turns back down, maybe with earnings being a surprise or something like that, some weakness there with earnings. I don't know. We're just kind of thinking through scenarios. But you would overall say if this curls down, continuing that negative trend, tests that area and then uses it as rejection, that actually can lead to more downside. So Amazon is one that you have to be very, very careful with for downside moves because it is already negative. Bigger downside moves happen in negative territory. Now, NVIDIA, this was a interesting play here. We saw some signals that say, hey, from this level, we could bounce up. But obviously, we always say in our YouTube videos, two sides of the story. There's always a way up. There's always a way down. You just have to be ready to react. So as of this bar right here, I know it's a big one, but that bar right there said, hey, now we're confirmed heading to the downside. Now, the key thing for NVIDIA is going to be the shorter time frames. Please come back on Sunday. Make sure you're subscribed for the shorter time frames because NVIDIA is going to be a massive, massive deal going forward because it does have some reversal signals in here. But this is something you have to pay attention to if this is experiencing weakness because it is supposed to be, hey, or at least it's a lot of, I would say, rumors or a lot of people coming out and saying NVIDIA is the collateral for things like AMC and GME. So if this is experiencing weakness, that means their collateral is being damaged and they have to front money in order to continue to suppress AMC and GME. So do they have those funds? That's going to be kind kind of the question going forward with AMC and GME as it's seeing that upward move. When we get earnings on September 10th, maybe that will tell us a little something. But for now, come back for Sunday so we can show you those shorter time frames. We are in a little bit of a support zone as of right now. We weren't able to close below it, so that's important. But you crossed over on the MACD. You can head to lower levels. We can go test that 200, maybe make some kind of divergence down here for that. So that's something that we will pay attention to. A divergence on the RSI looks unlikely, but maybe you make something for the MACD to say, hey, we get some kind of bounce, and then that does continue. So these are all things that we need to be paying attention to as we look at the monthly scale. This one has just been scaling up and up and up forever. So if the monthly scale says pullback, that could be a little bit dramatic, right? We could end up down towards something like $35 for NVIDIA if this monthly does curl over, and that's why you have to be aware of your monthly charts. AMD, if we look at a monthly chart, this is going to be key. Now this has 23 days left in it in the bar, so that is key to pay attention to. This has crossed over, but you have a long time if that is going to rebuild. As of last month, looked like some sort of indecision, so now you're getting that direction down. If we start to cut below this low and we head towards the end of the month, you could start to see something dramatic going on into just October. So it's saying September could be stressful. October, if September ends stressful, then October could be stressful as well. So that's something key to pay attention to with AMD. Has curled down as of right now on the monthly MACD. We have 23 days left, so this bar is still forming. If we go into the daily scale for something like AMD, a key thing here is we did react down. Okay, we came out of this zone and then we reacted down into the zone. We didn't close outside of it this time. So that is telling me I have to be aware if this MACD does curl up. And you're going to want to be aware of this on a lot of charts, okay? Even if they've curled over just recently, if they can curl back up, then this is all just going to be a blip, right? And we're going to head to maybe higher prices because that's going to be able to go positive, and this move most likely will give you a breakout. But as this is curled down, the most probable thing is downside until you see that thing curl up, until we see that positive price action. I think that's key to understand. Now for AMD, you also want to pay attention if that heads to lower levels because we could create some divergences down here. That's what I'd overall be paying attention to for AMD. Am I trading this by any means? No, I think AMD is one of the wonkiest stocks in the market for this whole year of 2024. It hasn't really, it's had like maybe two obvious trade setups in the last, in 2024, and I've really enjoyed those. But ever since then, it's just had these weird times in here, weird times in here. So is it the best trade setup? It could form something on the daily that could be a good trade setup. That's what I'd say. If this formed, that would be a good trade setup to me. But for now, AMD experiencing weakness. We should expect weakness until things turn around. Meta, this is one that actually had the most probability to see positivity, and then that rolled over. The shorter time frame is going to be important for this. Make sure you're coming back from Sunday. And if you're caught off guard by a lot of these things, you might need to take those courses down in the description. I know I'm mentioning them again. Most likely we will take those away soon. But as things get crazier and as a lot of things were going on in my life this week, I just was like, let me let one thing go. And I don't think it's a bad thing to allow more people to get that course for the cheaper price. But that will be going away soon. So just be careful, guys. It just means don't spend a bunch of money on courses when you could take one that is actually going to be beneficial for you. If you have questions about that course, and the reason I'm saying it can be beneficial for you and why you should get it at that price is because there's tons of people in my chat, if you want to come to my live stream and ask questions, who have benefited from that course. So just pay attention to that. As we look forward, I want to look at a weekly chart here and just show that extreme rejection from Meta. So weirdly enough, if you really look at this and we just kind of take out these lower levels, this could be some overall topping out structure. If you start to break and close below something, I would just more so say closing again below 453.08 and you get a follow through day that takes you below these wicks, you're going to see some ugly price action. And this is a massive rejection right here. And it even is divergence. Actually, if you look across, it pretty much looks like a double top with those levels. So you're getting a rejection here, a rejection here. It's really struggling to turn up. So that also tells me to the bull side, if we do something like this and we're actually able to cross, that would be a big deal. So we don't always have to talk about negativity when we see downside. You still want to be aware of how things could switch back to positive. It's just for the time being, things are heading down. People get confused a lot and wonder why I talk about positivity when things start to get negative. And I'm just like, so you're open to it. We obviously know that this weekly rejecting here is a bad thing, and the most likely thing to happen is continuation. But if that continuation leads you to be too bearish and you think this is going to be some kind of crash and you ignore a reversal signal here, it can do a lot of damage to your accounts. So that's something I wanted you to be aware of. As we look at the monthly scale, remember for Meta, that the monthly scale, this thing just ripped up with 2022. So down in these areas that January, pretty much January 2023, we started to really confirm more upside here, and that just screamed to the upside. So as of right now, you don't necessarily have divergences on this, but what would a pullback even look like for this stock? Well, a pullback could pull you back all the way to 380 at this point. That would be a good pullback. But if you're going to see a more dramatic pullback, I would think this level down here of about 300 to 320 looks pretty likely for Meta, and then we'll see what happens. And now it's time. Let's get into some AMC and GME. AMC curled up on a monthly chart. What does that tell you? Well, everyone telling you that this is dead, this is terrible, this is awful. Well, when a monthly chart does curl up, a lot of the time it means, hey, this could be a good investment for 12 to 18 months. If you look back right here, it curled up 12 to 18 months or 12 to 24 months later. What'd you see? A big thing happened. So you can see that big thing again. It will take time like it did last time. Look at that. It took time last time. And then over here, we see this curl up right here, and we did get a month of positivity and that confirmed back down. So we're going to pay attention to shorter time frames, looking at something like a daily scale. This is going to be the most important chart, is going to be the daily scale. And this is great because it's ending at the high of the day. Now, Roaring Kitty did tweet pretty much saying that he is not going to, or he's dropping Chewy is what I overall take from it. And then at the same time, we saw Unusual Whales post that there were millions of dollars in calls bought in 5,000 blocks, which just tells us he's doing it similar to how he did it the last time. And if this daily turns up, you could see something crazy. Just note, we're going to give you that updated level for a gamma squeeze this week. It changes every week. We use the options data to calculate it. It is a weekly range, but that is an unexpected zone. So if you're getting outside of that, you can see something crazy. And that's a very good point to have. And we're some of the only people on YouTube that give out that information completely for free. So please tune back in on Sunday if you're interested for those levels. And you can come into my live stream and we can kind of flip back and forth between stocks, but check on AMC and GME together. I think that's a lot of fun. As we go over and look at GME, this is already curled up on its daily MACD. We see a little bit of selling. So AMC actually closing at the high of the day is fantastic. This closing towards the high of the day, but not exactly on it, not able to cross above this level. We'll give you that updated gamma squeeze level for this week for the unexpected area. But for now, you have to say earnings is coming around the corner. GME is trying to make a move on the daily scale to go positive, and that's kind of a big deal. This going positive is a huge deal. Big deal. So the shorter time frames did help us out here for AMC and GME. Weirdly enough, just a few days ago, we were talking about how AMC showed a 30-minute divergence that can turn up a 2-hour. Those are the signals you need in order to turn up the daily scale. What happened just a couple days later? The daily scale looks like it could turn up soon. Okay, so that tells me we're paying attention to the right things. Obviously, this stock can continue to be suppressed. AMC can continue to be suppressed. But for now, if daily scales turn up, you just might see something crazy. And all of this is happening at the same time. If you don't think those things are connected, well, then why are they all happening at the same time? Volatility trying to base out and close with green bars above all of the moving averages. So holding that crash signal, the crash signal is already there. We could experience more of a crash going forward because this is still turned up positive and positive territory on the daily scale. That crash signal is the 50, able to cross that 200 moving average. And now you're above all those moving averages, basing out, curling up on a lot of smaller time frame. So that tells me volatility can continue to come in this week. Obviously, we have to pay attention to reversal signals in certain stocks like NVIDIA, but I think the open on Monday will give us a lot of information, and those updated weekly ranges could give us some information of where we could see stocks heading soon. So if you need that that weekly information, the weekly ranges, the expected moves for every stock that we cover on this channel, including AMC and GME, you can get those down in the description on Patreon for just a cup of coffee a month. That information is worth probably hundreds of dollars a month if you use it correctly, which is why we have the course. We teach you how to use that information. But volatility scaling up here, still positive, right? We said if this curls up after getting a reaction to the 200, watch out, because that means probable crash territory here. This thing can really start to scale up. So I'd watch those volatility calls very closely. If we continue to head higher, this thing could really pop off. So something to pay attention to there. That's all it is with volatility. We have the crash signal, so you have to be aware of the crashes that could be taking place. Dollar, we talked about the dollar basing out, right? It based out, it gave us that divergence on the shorter time frames we were looking for, and it came up. It reacted all the way down to that level, didn't cross on the MACD, started to move to the upside. So we could be in a time where we see that prolonged trap. We'll pay attention to that. But for now, this turning up is a big deal. We'll see if that can continue and get to this zone, because the dollar basis before the stock market, that happened just a few days ago. And then guess what? Shortly after, the stock market starts to fall pretty dramatically. So at this time, the dollar is scaling up quickly, which means people are flying possibly into cash soon. Once again, also, this is not an extremely high level for the dollar. You need this to extend. We need this to really follow through, because we need that sign that people are really flying to cash and getting out of assets. That will really help us out going forward, and that is something to pay attention to. But as that dollar does scale up, that gave us a great hint with that basing that there was some kind of top coming. We were aware of it. We were aware of the signals. We were aware of the bullish thing that could happen. For now, looks like everything's looking bearish, and we'll see what happens going on into Monday. So I guess the main takeaway here is we still have to be trading like water. And I know it's like, okay, we could say crash. Saying crash is the easiest thing in the world, because if you're wrong, hey, nobody's going to fight you on it. But I want to more so say this is potential for a crash. This is highly probable to be a crash, and it will be more highly probable and more obvious if we turn down on monthly scales. Because as of right now, we are outside of this monthly range. So that means we do still have a 68% chance to land up by the end of September. Okay, so what if all of this turns into some basing out and then we end up in this area by the end of September? That's what we have to pay attention to. But we also can say we're seeing those crash signals. So if we don't see reversal signals here, or if those reversal signals just produce a small bounce that then curls back down, that would tell me watch those monthly scales, watch everything, because this could be a prolonged downside. And you guys know I've been leaning towards a bear market. So these are things that we need to be paying attention to. If you need to learn a lot of this stuff that we're talking about today, please get the two courses that are down in the description. Starting off with swing trading is always great, but the using technical indicators course, divergence and weekly ranges, to really get a good insight into how high or low the market could go, and seeing those reversal signals and getting good at it can really make you become a great trader. So thank you so much for watching today. I really do appreciate it. I hope you have, even though I'm saying learn over the weekend if you need to, I'm also saying make sure to have some fun. Treat yourself over the weekend, make yourself refreshed so that you can come back to the market on Monday and have a great attitude and be ready to move in either direction. Really trade like water. And I think that's something that a lot of people need to understand. Trade like water. Let the signals do the trading for you. You just click the buttons. Thank you guys for watching. Really appreciate it. Hope you guys have a great weekend, and peace out. I'll see you Sunday.